Welcome back, YouTube. So in today's video, I'm going to be going over the fact that we're 6% away from a bear market officially. What does that mean for the crypto market and some of the best ways to actually play the coin? And I'm also going to give you whether or not I believe we are close to those bottom numbers, or if this is just going to rebound and resume from where it was before. The chart you're looking at is the NASDAQ. And technically, by textbook definition, we would be looking at a 20% decline in the market from its high to officially declare a bear market. We're currently sitting at around 13, 14%, well, almost 14%. So that's why I say we're about 6% away from officially being in a bear market. So, what does this mean? So, technically speaking, what we've experienced over really the last few years has been unprecedented growth. I'm going to expand here. This is the NASDAQ. This isn't a crypto chart, but let's do the last year. This is what the NASDAQ looks like over the last year, which is absolutely incredible. So over the last year, it was pretty difficult to lose money in the market. So you could have just invested in almost anything and it would have appreciated. So what we're having now is we're going to have a lot of that money that was technically not never supposed to be there in the first place. It's going to be extracted from the market. And there's a lot of reasons that there's fear in the market. The retail sector in general, and I just want to put this out there, the retail sector never controls the market, bull run or bear run. So we've been over the last year, we've been getting around $120 billion a month injected into the markets, via bonds, mortgage-backed securities, stuff like that. But overall, it adds confidence when you have that type of liquidity going in there. Interest rates, cost of borrow, stuff like that goes to near 0%. It's a great time to be alive and be an investor. But the market is being held up by what I call funny money. So when these threats start coming up saying that, okay, well, the money's going to go away, at that point the market becomes really fragile because the institutions know, okay, well, we're going to need to rebalance these portfolios, and it's possible that we probably need to go ahead and take profits and get out of some of our leverage positions via margins and short positions and stuff like that. They typically are going to close those out and regroup and gather their profits and wait for the consolidation period before they come back into the market. The problem with this is over the last year specifically, we had the highest number of retail investors in the history of the history of the planet enter into the market for the first time and decided that they were going to start investing, whether that be in stocks and or crypto. So what we have now is a bunch of people who have, you can really just say amateurs, but what we're looking for here is to really just put into some perspective on a lot of the phrases that have become popular over the last year so that no one gets hurt. So phrases like buy the dip or diamond hands and amongst others. But typically we want to get a grasp on this because the people that have entered the market within the last year or so, they're about to experience their first bear market. And this bear market, unlike the other bear markets, is a little bit different. So it's a great time that as far as the people being inside of the market, and if you are prepared and you're ready, this market, these opportunities that we have coming up here, they're going to be able to provide a lot of the wealth that people were seeking for the last year in the market, but you're going to have to play your cards right. What do I mean by that? Well, the money that's in the markets now, a lot of the money is going to have to be extracted and removed pretty much from the economy. The Feds are going to get it back and they're not going to loan it back out. So what we're going to see is a contraction in the economy of some sort. Now, I do believe that this has happened somewhat in the past as far as the Fed started threatening to raise interest rates and the market started trending downward. This is what's possible to give us a bounce. Before I get into that, I want to say this. This is possible to give us a bounce. The Fed can, in fact, change their mind about how aggressive they're going to be about raising those interest rates or simply postpone it, and the market will kind of settle off and level off and it will remove a lot of that fear. They've done this in the past. I want to say like 2017, 2018, because when you start speaking like this, the market makers and the whales, they're going to start positioning themselves to move money around. And also we have to look at the fact that crypto, for the most part, is still considered a riskier investment compared to the stock market. So this is when you would see those massive sell-offs in crypto for them to rebalance their portfolios, over leveraged positions, margins again, short positions and stuff like that in the stock market, they're going to raise capital in order to cover those positions. And I do believe that is what's going on because there's been an astronomical amount of money that has been pumped into crypto. Again, we peaked over 3.3 trillion this year. So when things are, if there's going to be a consolidation or a money crunch, or money is going to be more expensive to borrow and to reinvest, positions are going to get liquidated. So that's why I know for a fact that this does in fact happen, the crypto market is going to get hit, and more than likely even harder than what it has been so far. For the people that are invested in coins like Bitcoin, Dogecoin, stuff like that, this provides you with a unique opportunity. I gave the numbers for Bitcoin and Dogecoin as far as for opportunities to buy in, and we got the bounce for Dogecoin at around 12 cents, which was expected. I don't know as far as for will that number hold. That really just depends on the actions, because again, this is just mostly fear in the market. If we're down 13% off of fear without them actually moving the needle, this lets me know how much money is actually in the market that does not belong to retail. And again, I suspected this. It's kind of obvious based off of the math, but if we can drop this much and have crypto sell off like $1 trillion that quickly based off of fear, I know for a fact this can get much more ugly than what it has been so far. So when it comes down for us, as far as for crypto holders and long-term investors, when you have the opportunity to buy in at these prices, yes, this is an absolute opportunity of a lifetime. But you also have to be strategic as far as for when you're buying. You can say buy the dip, which I technically agree with. A dip can be, that's subjective, because a dip is technically 1% could be a dip, but when you have to leave a room, just like kind of like buying, saying you're going to buy every month, or you believe that you're buying and making your entry point, you leave some money on the table so that you can average down if need be. It's possible that we're going to see cheaper prices than what we have so far. So when you're buying the dip, just make sure that you're never going all in. And if you want, just because I don't believe this is going to go away, especially until we get an idea at the end of Q1. In my opinion, I think that it would be great if that, if revenue was kind of like spread out more, so like on a weekly basis versus, oh my God, I'm going to miss the opportunity. Yes, coin count matters, but I do believe that unless the feds come out and remove that uncertainty that's in the market, I believe that this is not going to go away, and this kind of like rainy cloud is going to be like over the market until we get concrete information as far as what direction we're going to be headed with these interest hikes. Dogecoin was already in its consolidation point just because it's not as heavy invested in by institutions and the retail sector. Once these other coins started coming out, the money, more so of them, they started selling off just because of patience and pretty much them being new, lack of discipline. And then all the other coins came out and it was like, oh my God, you can make 100% over here. So the initial investors started pulling out a lot sooner. And so Dogecoin was on a faster consolidation. But make no mistake here, the rest of the market is catching up. Dogecoin, that's the reason it was easier for me to call Dogecoin's floor, because it was closer to hitting Dogecoin's, one of Dogecoin's resistance levels. So that's why I suspected that it would get a bounce off of the 12 cents, which we did last night. But when it comes to Bitcoin, again, matter of fact, I'm looking in stocks. I need to go to crypto. But when it comes to Bitcoin, we are in this wide open territory. So unless we get some positive news or something like that in the markets to stop this, our next stop is going to be around 30K. And I told you guys this over a week ago when we were here, when I was making these charts. I said there's a gap up. If this floor doesn't catch us, if we break this 34 level, then we're sliding. And then, because this is a gap up here, there's no support here. And this is exactly what's happening. This is like literally a slide to hell. So our next point of resistance, hopefully, but our next point of resistance here is going to be around 30K. I have my numbers out there as far as for my overall projections. Retail can come in at any point, and retail and institutions really, that they want to enter the market early and start pumping the brakes on this. But Same thing as far as for Dogecoin. A lot of retail can come in because I do believe that's one of the reasons it's rallying now. So people are like buying the dip at 12 cents. So it's kind of putting the resistance on so you can get a bounce. But for Bitcoin, you can people can come in and kind of pump the brakes. So you can say as of right now, the first level of resistance will be 30. Bad news comes out with the Fed, expect closer to 20,000. That's what I have for um, Bitcoin here. And for Doge, let's look at Doge here. Doge, again, we have, matter of fact, I have to look at Coinbase because I know my app here doesn't go that far back. But for Doge, if we look at let's go to year, no, 1 year. For Doge here, again, we're in that same gap up territory. So the 12 cents, if that does not hold up, again, the strongest resistance is going to be around 6 cents, but retail can come in, and I do believe we will, and start buying aggressively and kind of do some pushback against that fall. So we could possibly hang out like around 8 or 10, but 6 is the absolute bottom number before technically you reach like, okay, those obvious oversold prices. And then at that point, we'll be due for a major correction the other way. Again, there's a lot of variables out there. Nothing is guaranteed. We're going to have to take this day by day and run the numbers. But this is why I believe it's best to, if you have capital to invest, give yourself an opportunity to buy some of those lower prices. Never put yourself in a position where you're over leveraged and you don't have an opportunity to capitalize off of some of those lower prices. So, by all means, you see a lot of sentiment saying buy the dip, dollar cost average. Great principles to follow, but give yourself an opportunity, especially if you're aware of what's going on in the market. One thing is for sure, if this continues next week, we will certainly have our confirmation as to whether or not we are officially in a bear market. So at that point, you will see more sell-offs from businesses to raise capital, and you can expect a lot of those lower resistance lines to be tested. Now, always keep in mind, bear markets, corrections, sell-offs, they have no deciding factor on the rally of a coin or how far they're going to go. I don't care if Apple goes down to $100. It has no effect on where Apple is going to go in the future. I don't care if Dogecoin test that $6,000 level or Bitcoin test that $20,000 level. It has no effect on where Bitcoin is going to go and where Dogecoin is going to go. So always keep that in mind. With that being said, as always, I hope you found value in this video. Consider subscribing to the channel if you want to hear more from me. I do this every day. As always, no FUDs and hopium, just facts. And also like the video so YouTube can decide to share it and spread this information with other people. And don't forget about BlockFi. I have a link in the description. If you open an account with them, you can get up to $250 in some of your favorite crypto, and that is including Bitcoin and Ethereum. I appreciate all of you. Thank you. Until next time.